Hello, everybody. So this video is to help you get immersed into the practice set. Now, the first part of the practice set probably has, not probably, but definitely has the most tedious aspects to it because it's meant to walk you through the accounting cycle in a pretty detailed way. So what you get is a company that reports quarterly, and you have a starting basis. And then you're just asked to do the steps of the accounting cycle all the way through, creating financial statements, all the trial balances along the way. And that's the project. So let's take a look at it. I have the files open. There's really two files. The first one is a Word document. And admittedly, the first page of this, where it talks through the different accounts, what's involved with them, some quantitative information within each piece. This is mostly going to help you with step four, the adjustments. So if you're just beginning, you can probably bypass some of the information in here. You're going to go back to it when you have to make adjustments for sure, because it tells you about the useful life of the different assets, the different prepaid assets that the company has. It gives you information that you need for the adjusting entries. Now, the second page, or I'm sorry, that third page is the post-closing balance for the year prior. So we're starting this company on January 1st, 2022. That's when we're starting the reporting. But this is where the company was at the end of the prior year on December 31st. So that will inform your balances in your ledgers, your beginning balances. And I'll show you that when we switch to the Excel document. Right? The fourth page has all the transactions, right? So these are all the things that occurred during the first quarter of the year 2022. Make sure that you prepare all of them. And that's just what the objective is. You make the journal entries, that's step one, post them, that's step two, then have an unadjusted trial balance. That's step three. Now remember, I have posted check figures for all the trial balances. And in the unadjusted trial balance, I have check figures for certain accounts that have a lot of transactions that tend to give students problems when they're working this. So let's stop there for now. I'll talk a little bit more about step four, adjusting entries, in another video. But this is again just for people starting to really get going on this project. So I'm going to stop that, we'll share, and then switch over to the Excel project, the Excel file, right? So this is the student Excel file, and there's a lot of tabs on it, right? There's a lot of information we collect in an accounting cycle. And so, dang it, I don't want to annotate that, but I want to move tabs. That's a little annoying. Maybe blow it up a little bit more. There it goes. Oh. Oh man, this is annoying to me. I wish I knew hotkeys. There we go. Okay, I got around it. Anyway, if you couldn't see what I was struggling with, there's an option on Zoom that's asking me to annotate, and I didn't really want to annotate this. So the first tab gives you all of the accounts you'll be using. You don't have to do anything with this tab, but it's here for your consideration. Really, what this does is it gives me a list to draw from so that when you go to make, this is the tab for journal entries. When you go to make a journal entry, when you click a spot for the account, it provides a drop-down menu so that you can choose the account from this list of accounts when you're creating your journal entries, right? So the post-closing balance is here as well. That was in your Word document, but this allows you to link it. And I'll show you what I meant about these ending prior balances are the beginning of the year balances for the current year and how that affects the ledger. So now I'm going to the ledger assets tab, the first one that has all my asset accounts listed in a ledger format. And notice the beginning balance is here for cash. And the beginning balance is actually not inputted as a number, but rather a cell reference. And if you've not used Excel, cell references are going to help you so much on this project to the extent that I want you to use them. I require that you use them. So what this does is it basically says, well, whatever is in the tab post-closing trial balance, the one down here where my cursor is, take whatever value is in C6. And when you hit enter, it returns the value there. But notice if I stay on the cell, click in that field, and move over here, this is C6. This is what it's drawing. So that's already done for you for all the beginning balances. And you can take note of that in this file. We'll come back to this in a second. Supplies is grayed out because you won't use it. We'll come back to this in a moment. So you have your original journal entries. Now go to your Word document, right? We need the first transaction for the year, and I'll go ahead and work the first transaction. So I'm going to go back to the Word document to grab the first transaction. It says that they issued an additional 15,000 shares of $1 par value stock in exchange for $1.2 million of cash. All right. So for our journal entry, go back to the Excel. So we issued common stock for cash, sold our common stock. So we received cash. That would be our debit. That would be our debit account. We issued stock, sold it. Issued just means sold on the market. And we sold it for an amount that was over its par value. And so we also need to post a credit to additional paid in capital common stock. All right, now we do have to input the amounts here. So we got $1.2 million of cash and we issued 15,000 shares of $1 par value stock. Now, we can only record common stock at its par value, so that's $1, 15,000 times, so $15,000. The rest of it actually is just going to be the excess of the sell price over the par value. And so here we would have the difference between those two items. And notice I'm doing this with a formula. I started with the equal sign, and then I highlighted or clicked on my cash amount here in this cell. That posted G4 as what I'm starting with in my equation. And then I hit the dash or minus, and then I'm about to select H5. And when I do that, it automatically returns the difference between those two. Okay. So Excel is a really nice program, especially in accounting. Most companies you work for are going to expect at least a very basic level of proficiency with this program, and will certainly appreciate any advanced skills in it that you have to bring to the table. All right, so we got this. Now, the first thing I would do is go ahead and do step 2 with this one entry. I'm going to go over to the ledger assets because my cash account was involved, 1.2 million, and I'm going to cell reference it. So we debited cash. So I go to the debit row and notice I'm doing it on the row below my beginning balance. And I type an equal sign. Now, not clicking on anything here, I go over to my original journal entry tab and I highlight on the cell that I want to cell reference. I click it and notice it's selected with a little marching line around it. It's inputted everything it needs, all that code, saying pull from the original journal entry tab down here, cell G4. That's the cell that I highlighted. Once I click enter, it'll take me back to the ledger tab and have inputted that amount there, 1.2 million. Now, the reason why this is really handy is if you made a mistake, then you go back to your original source. And let's say it was $1.5 million instead of 1.2 million. All right, well, I fixed it. My additional paid in capital updated because I had that formula in that cell. It subtracted 1.5 and 15,000. But now also look what happened in my ledger. It automatically updated because I cell referenced it. So if there's a mistake, it's so much easier to fix them. If you say, I can't balance this, I'll look at your journal entries and I can say, well, this journal entry is off. Well, when you correct that one journal entry, if you've done cell referencing throughout, it will take that correction all the way through your document. It is so time consuming, right? So I'm changing this back to the appropriate amount. And then I need to bring these over to my ledger. I'm going to go to the ledger liabilities and equity. And here's my common stock account in the ledger. It's a credit to common stock for 15,000, but don't type it in 15,000. Go to the cell reference and it's included. I'm going to do the same with additional paid in capital. And now it's updated. Also want to bring over the dates. Makes it easier to understand your work. Oh, I didn't actually enter in a date. My bad on the journal entry. Well, so I already started cell referencing to get the date over here, right? I went to the date column, click there, hit equals, and I want to select this cell. It's okay, nothing's in there because now once I update it, it will update this to something. So if I go back to this journal entry and they sold that stock on January 1st of 2022, put that in there. And if I go back here, January 1st is recorded, right? So I'm going to update this one as well. And the cash account. Make sure I'm dating all of my transactions to make it easier for my professor to help me correct them if I need it. Okay, so I want to show you a trick too for this ledger. Now, this is its balance currently. After we update it with the 1.2 debit, it'll have a new balance. And I'm going to use an equation in order to make this very simple going forward. So I type equals, and I'm starting at this balance. Because I debited, I'm going to add the balance in that cell. And even though there's not a credit here, I'm going to input that, that this cell, the credit D8, should be subtracted if there's a balance there. And you'll see why I do that in a second. All right, so I have that set out. Notice this now reflects my updated debit balance after this one transaction. And that's going to help you a lot because if you start, for example, getting a credit balance over here with your cash, that means something's wrong. That means you spent more cash than was in your cash balance. So you probably have misrecorded something. Now, remember, this is an equation. I start here at the previous balance. I add anything that I debit here and I subtract anything that I credit there. Now, the reason why I included this, even though there wasn't a credit there, is that I'm going to copy that formula all the way down to my colored cell here. And all it did was return 16,980, but that's because it's adding empty cells on every row. So for example, if I got more cash, say 500,000-ish, notice it updated. Maybe in the next transaction, I spent cash. Maybe I spent a huge amount of cash. I spent 5 million. So now I dropped it to 12. So anything I update here will continue to update all the way through my sheet as I enter in numbers. Oops, see, notice I just forced it negative with this ridiculously huge outflow of cash. This should not happen. If this happens, then you've made a mistake, right? Because it's just impossible to have negatives in a T account. Anyway, the functionality of Excel cannot be overstated enough. It really does help make this project 100% less tedious. So use all of the tools at your disposal. And if you have issues with the Excel piece, quite honestly, you can Google and get a YouTube tutorial on almost anything with Excel. They're excellent. I do that all the time. And if you still feel a little lost, of course, you can ask me as well. And I don't have a great knowledge of Excel, but I have a working knowledge of it. So I can try to help you out. The other thing I was going to talk about real quickly is why some of these are colored. This is filled in with like a peach. This color symbolizes the unadjusted balance. So basically, after you fill in you're going to have one cash transaction in every row all the way down here. And then whatever this is was the last cash transaction for the period. And this is your unadjusted cash balance. So this will also, filling in these peach colors for the cell is meant to help you identify, did I log the appropriate number of transactions in for an account? So it gives you a little bit of guidance and help. The greenish colored one underneath some of them is for an adjusted balance. Okay. So some of these have adjusted balances like accumulated depreciation. That will be obviously only after you've logged an adjusting entry that you would occupy this row of the cell with any sort of balance. Notice finally that there's yet another color on the income statement accounts. This is where the post-closing balance will be. And for these, for our expense, revenue, gain, loss accounts, all of those will be zero. So that should help you get started on this. Go through, start mapping out all the journal entries and fill them in. Remember to use cell referencing. These are the only cells that you will be typing numbers in, is on your original journal entries for the first 3 steps, because everything else is going to cell reference forward. Now, I noted that I unintentionally gave you guys a little bit of help on the unadjusted trial balance. Not a big deal, but I still have some of the cell referencing here for some of the accounts and actually some of the amounts. But these amounts, for the most part, didn't change. Okay, but these amounts are still here. So don't be fooled by anything. I just forgot to delete some of the coding in here, right? You will have to fill it in for some of the rest. If you have any other questions, please feel free to email me, and I would be happy to help. And I will make another video covering the adjusting